Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Earnings season is winding down, but we're still getting a bunch of retailers and some big tech names are coming here at the end. So what ones should you be watching? I'm bringing you 5 of the hottest retailers or most intriguing retailers you should be watching this week because there are a lot of big names reporting. We've had a lot of earnings retail reports already. Most of them have been far better than expected. But what about these more niche players? Will some of these also surprise? They might not have the grocery side like a Walmart or a Target does, but we're going to hear from some of the big department stores and these more specialty retailers. Let's dive right in and see which ones you should be looking at. So the first one out of the gate is Urban Outfitters. And as you can see, it has a very interesting 5-year chart. It has missed twice the last 2 quarters there. So it kind of has this negative streak going on. And that's because things have turned more difficult for the apparel retailers here in 2022. Now, remember, Urban Outfitters has Urban Outfitters, Anthropologie, and Free People. It also has that big furniture component of the Anthro brand and also to some extent Urban Outfitters. Now, Urban itself, the main brand, still continues to be popular with teens and 20-somethings. So I'm going to be watching that one pretty closely. Anthropologie has been benefiting from the surge in special events. They sell a lot of dresses, things like that. So I'm going to be watching that part of it closely, but the promotions have returned on apparel, and anybody who follows any of these retailers know that they're starting to get a lot more emails and text messages and 20, 30, 40% off, 75% off summer, things like that are going on again. And that's like a flashback to pre-pandemic. That's going to go to the margins, right? And we still have some supply chain issues with some of these companies. Urban Outfitters was one of the ones that had to fly in product last year. What's happening this year? Has that all cleared up? Probably has, but we will see. So Urban Outfitters, one of the key ones to watch on the apparel side. Then we're going to switch it over to furniture with what I consider to be the top furniture brand name out there, Williams-Sonoma, ticker WSM. And like Urban Outfitters, it's not just Williams-Sonoma, which is more of the food and accessories type of brand, although they too have a furniture line that they've launched now. But they also own Pottery Barn, West Elm, Rejuvenation, a couple others, but those are their big brands. And so they have the hottest brands in furniture. They have this great track record, no earnings misses in 5 years. That's incredible given the supply chain issues, COVID, all of that going on. So management really has a handle on what is happening with telegraphing their earnings to the street. Now, their stock is dirt cheap, trading at 10 times. Dividend is yielding 1.9%. They never cut the dividend even during the pandemic that I can remember. So this one is, again, one of the top names. Now, a thing to watch with Williams-Sonoma is their B2B business. That's business, where they are supplying the businesses, not just the regular residential customer like you and I. That area of the business has also been really strong as, restaurants, hotels, things like that reopen. So Williams-Sonoma has got a lot of good things going for it. It has a 5-year return of about 250% versus just 74% for the S&P 500. It has rallied big off those lows. You can see there the summer lows. It flipped a switch and it's up about 50% in the last 3 months. It's only down 3.7% now year to date. But is this the kind of last gasp rally before we see, some further downside here as the Fed continues to tighten? Nobody knows. But this is a key one. I used to own it in my own personal portfolio. I did sell earlier this year just to lock in some of my gains. I was a long-term shareholder. So what will be happening on the furniture side? This is the one to watch. Then we're going to switch it over to another area that's also going to be very interesting. Dollar General, ticker DG. This is on the lower end. Now, they also sell a lot of food items, so that's going to be interesting. What's happening with their margins as these inflationary pressures are out there, and all these retailers getting pressured by that. They have beat 5 times in a row and have a good track record. Other than that one miss in 2021, they did not miss the other quarters during the pandemic. So that, again, is impressive. These shares trading at new 5-year highs. Who's doing that anywhere? They're up 244% over the last 5 years, again, easily defeating the S&P 500, which is up just 74%. So Dollar General has been one of the stocks everybody's wanted to be in during this time period. It's no longer cheap. It has a PE of 22. So you're not getting it as dirt cheap as you are with the Williams-Sonoma or Urban Outfitters, also trading at 10 times there. So this one, a little pricey for me. Price for perfection, we will see. Then we're going to switch over to, again, another area of retail, the beauty side with Ulta Beauty, ticker ULTA. This is a popular one by investors. I've owned it for years in my own personal portfolio. They, too, have a good earnings surprise track record. They've put together 8 beats in a row. That's also impressive during the pandemic. And they have modified the business. They were always had the good distribution centers and online delivery, but that has picked up steam while the stores were closed during the pandemic, and now stores have reopened and foot traffic is strong. A lot of the beauty companies reporting that brick and mortar is where it's at. Well, Ulta Beauty has hundreds and hundreds of stores in the brick and mortar. So I'm expecting a pretty good earnings report again, even after the big beat last quarter. Now, what are the shares doing? You can see that they're not really going anywhere. Year to date, down just about 2%. Over the last 3 months, up 17.5%, kind of in this narrow channel. The company is doing a huge share buyback plan. They started in March 2022. It's $2 billion. So you're not going to really expect to see a massive sell-off here because they can deploy their own cash to go in and buy those shares. But what will be the catalyst to push these shares higher? The PE is about 20, so it's not one of the cheapest of the retailers, but beauty has been a big winner in the reopening. And, now that we're all getting out in the world, beauty is an easy way to invest in what we look like now without a mask on. So this is going to be an interesting one to watch, and everybody's going to be tuning in. Then we're going to finish up with one of the troublemakers on the apparel side, the Gap, ticker GPS. It's coming off that big miss last quarter. It's had kind of an iffy run during the pandemic. At some point, things did look pretty good there in 2021, but then they didn't. And now the CEO, who only started not that long ago, is out again. So they have more management shakeups. They're expected to lose 5 cents for this year, but analysts do see the rebound again next year at 82 cents. They do pay a dividend, which I know a lot of you are diving into because it's yielding 6%. But I would caution on that given the earnings outlook about what may happen with the dividend. I don't know if they're going to cut it or what may happen, but I'm a little bit cautious about buying this one just for that dividend. So shares are down actually 55% over the last 5 years. It's been just terrible being a Gap shareholder. And this year, down 43%. Over the last month, they are off those lows. But what will happen this quarter? I don't know. I'm a little dubious, and I'm not really seeing much value here given the earnings outlook. So be cautious on some of these retailers that have been struggling, not only just during the pandemic, but prior to the pandemic. And because as you can see, the shares were already on the downward slope heading into the pandemic. So there's going to be a lot of specialty retailers, especially on the apparel side, that are similar to the Gap this week. You're going to want to be tuning in to see if there's any, progress in the turnaround, or if it's really just stocks you should be avoiding. So there's a lot going on with retail. And as I mentioned earlier, the big department stores also reporting, Macy's and Nordstrom. So you don't want to miss those earnings reports either. I like retail, as you know. And so this week is going to tell the tale about what the consumer is doing, what back to school looks like, what the fall may look like. But even the retailers themselves may not have much of forecasting abilities given all the balls in the air. So it's a challenging time. Stick with the winners, and you may be able to write it out in the top of the retailers. And as always, you want to be sure to subscribe to get our YouTube videos, because I'm going to be bringing them to you throughout this earnings season. I have one more coming up as we wind down here, so you don't want to miss it. You can get them all at zacks.com/YouTube, but be sure to get us somewhere. And I'll see you again next time with some more earnings charts.